Hello everybody, it's Peter Geary from Remax Island Realty here with my Friday figures. And we are now on November 5th, so I've got the October numbers all loaded up. And as it gets a little chilly in November, it seems the market is cooling the same way. Buyers, I think we might start be having a chance to get in the market, and sellers, time's running out. So let's take a look at the numbers. I thought this first chart was really something interesting. This shows you the number of price decreases that in the MLS of houses that people have reduced their price on because they didn't sell, and these are price increases. But we now have twice as many price decreases as increases. That means people put the house up and they thought they would get a great price for it, and the market didn't respond. I think we're seeing across the board a variety of indicators showing that the market is slowing. So year to date, we know we've been fast rising. This is the average price on Hilton Head Island, and what you're seeing here is up 28% for residences and up 19% for villas. So there's no question we've had a very strong market. Prices have been up for the year. Now, why don't we just look at October? And now you see we're only marginally up. So from a standpoint of month to month here, September is only up 3% to October. And then when you look at villas, it's actually down 5%. Now, this is a weird month here because we had that $9.9 million sale there. So there's a rather large sale here that's really bumping that. And we've been slowly increasing, but we've been increasing at a decreasing rate. And my feeling is that we're topping out here. If you look at days on market, and this is one of my favorite little charts, and this is days on market in week 1. So, we had a low of days on market in March of 2.7, and we've been rising. You saw in the September update, we were at 3.8. So, 3.5, 3.8, these numbers are both above the average of 3.2. So properties are staying on the market longer, prices are beginning to wane. And now if you look at this last chart, this is overall sales for the last 2 years. And what I've done is I've tried to show you where the COVID bubble is. And that's right here. It seems to be June of 2020 to June 2021 is the COVID time. And what I mean by that is when the market was most responding to COVID. So our number of sales pre-COVID were on average about 147 a month. During COVID, we doubled that, right? So that sucked off a lot of the inventory that was on the market and left very little out there. Now our rates are at 211, but declining, as you can see. Now, will we get up to last year's level as a total year for 2021? Probably just about. But you can see the first 6 months of 2021 was driving those numbers, and the last 6 months of 2020 were driving its numbers. But this is the bubble we're talking about here, and this is what is indicating that we're heading back down now. And so if there's less sales, that means there's less demand, and that means the prices are going to weaken. So to summarize, the market is slowing, and it's becoming more of a buyer's market. Year to date, prices are up 22% overall. Residences are outpacing that at 28%, villas below that at 18%. But October to November, we're only up 3% in residences and only 5% in villas. Now, week 1 days on the market are still longer than the average at 3.5. And interestingly, as I just showed you, monthly sales bubble seems to be popping in that pre-COVID levels. We're still above those at 211, but we're way below the COVID levels here. So buyers, things are beginning to turn your way, so it's time to jump in. And sellers, you better call your realtor and get that property on the market soon, because you're not going to be able to get these prices much longer. If you need a realtor, don't hesitate to call me. You can reach me at 843-715-6550 or hit me up on my email at peter@GaryGroupHHI.com. Have a great weekend.